Thank you for joining us for our latest episode of Dotcast, which is a series in which we interview leading figures in the world of private and alternative investments. In 30 minutes or less, we try to get inside the minds of great investors to provide our listeners with unique insights that will help them make more informed investment decisions. I'm your host, Luke Dixon, Head of Investments at Dot Investing. In this episode, we'll be talking about investing in forestry and timberland, a real asset investment that can generate high returns, protect against inflation, and have a big positive impact on people and the planet. Today, I have the privilege of speaking with Dr. Stavros Siokos. Stavros is co-founder and managing partner of Astarte Capital Partners, where he is responsible for strategic business development and is a member of the investment committee. Prior to founding Astarte, Stavros had a distinguished career in investment banking, investment management, and alternative investments at Citigroup, Piraeus Bank, and Science Capital Management. Most importantly, Stavros is one of the smartest, most innovative, kind, and generous people I've met in the industry. Welcome, Stavros.
Hi, Luke. Thank you very much for having me.
It's our pleasure. Before we dive straight into discussing forestry, I'd love to hear a little bit more about Astarte Capital Partners, your vision, your focus, your mission for the business.
Yeah, Astarte is a rather new asset management firm. We're quite unique on our strategy. We see mega macro trends like aging population, need for food, need for water, all these mega macro trends. And we try to identify which strategies backed by real assets will benefit from these mega trends. Then we team up with operating teams, which are experts in the specific thesis, the specific asset class, and we create asset management businesses made for institutional investors for this type of investments. We focus in natural capital, infrastructure, energy transition, and transportation. We are global. We have presence in London, where our headquarters are. We have an office in Toronto, we have in Sydney, and we have one also in Athens. Our aim is to provide access to institutional capital, to real asset strategies with top operating teams who are able to provide the best-in-class real asset strategies driven by macroeconomic trends. So we combine the best operators, the best macro trends, and we wrap it up on something that institutional investors understand in a framework that is beneficial for everyone.
That's really interesting and very topical, I imagine. You must be really busy fielding interest from investors, particularly with all the talk about inflation these days, real assets being, I guess what everyone understands to be assets that typically protect against inflation. Are you seeing a lot of interest in the various strategies that you're pursuing?
We're seeing a very strong interest for many different reasons. First of all, real assets have become a big issue because of inflation, because of many different things. We also see a lot of interest from investors about natural capital. There's a big drive for net zero investments. There's a big drive for green investments. And there's also a big push for infrastructure globally, especially in the Western world, where we as Astarte are focusing North America and Europe. And there's a big demand for sustainable infrastructure, for adaptive infrastructure, for value-add infrastructure. And this is something where the big players in the infrastructure space do not focus. They focus on when you have a 20 billion fund, you focus on major airports and major highways and major things like that. You don't focus on the local waste to energy, the local energy battery storage, the small water treatment facility. So we cover that space. And also another area, because we build asset management business, by coincidence, we are very strong on the GP stakes market. When we started this effort, GP stakes market was something that many people didn't understand. Now it's a market of its own. People like Dial, Petershill have made this more popular and more dynamic. And we are the guys who create the asset managers that will be attracted to someone like Dial or Petershill. And what is also interesting for us is that the business we create, all the capital buys real assets. Or if you don't buy a secondary stake on a GP, you just have the real assets. So the demand is increasing. It's mainly from North America, Europe, and Australia, to be honest. Asia is in a different speed, but that all is creating a perfect environment for us in terms of inflation, hard assets, need for infrastructure, a need for sustainable real assets. And a lot of people are focusing on different technologies, but some of the best technologies are just real assets. The best technology for carbon credits, for example, is a tree, no matter what you do. The best technology to capture carbon, no matter what you do now, for now, is a simple tree. So all this plays in our benefit.
That's fantastic. You seem to have really positioned Astarte at the forefront of a lot of these mega trends. So I'm really pleased that you've been able to find 30 minutes to speak to us this morning and share your insights with us. You mentioned GP stakes. These aren't the stakes you have alongside some chips and peas. These are interests in the asset management firms themselves. Just to clarify that for our listeners, I was looking at GP stakes businesses myself probably 8 years ago now. Probably one of Dial's earliest funds. And as you say, the desire of GPs to sell off parts of their businesses for a host of reasons has become extremely popular. And it's really interesting that actually the types of businesses that you're buying into or partnering with are actually potentially have an exit into a Dial or a Peters Hill as part of that trend. That's really interesting. So
we're building these asset management businesses, correct? So because we're building it, we are not buying a stake. Correct. So we transform an operating team or an emerging manager from an operating team into a GP. So we institutionalize the whole concept, and in the process, we get part of that GP. And it's something new for them in most of the cases. It's something we know how to do well, but after a point, it is an asset class of its own to be able to manage institutional capital for specific strategies backed by real assets.
Yeah, something you and I both know well. A lot of these managers don't have the infrastructure, the governance frameworks, the individuals to manage money for very demanding institutional investors, and you help them build those businesses so they can grow and scale the way they like. That's really, really interesting. I want to dive in and talk about forestry now. It's a niche area, isn't it, compared to, you mentioned infrastructure, renewable energy, some of the bigger themes in this space. But one of the reasons why I'm delighted to be speaking to you today is you've positioned Astarte in a very similar way as we've positioned Dot in terms of our desire to work with newer, smaller managers and our real belief that it's those smaller managers that are operating in less busy, less traffic areas that are going to generate the sort of interesting performance that our investors are looking for. They're higher performing than a mega fund, mega buyout fund, for example, that a lot of investors look at because the names are popular. But in reality, the better returns, the better performance is likely to be found with newer, smaller managers that aren't operating in those really, really busy spaces. And I think forestry is an interesting one. I've come across it, a number of times for many years, relatively modest allocations in institutional portfolios. But the real push in terms of sustainability and responsible investment, as you mentioned, I think forestry takes on and timberland investments take on a whole new sort of importance or relevance in individual investor portfolios and in institutional portfolios. But there's not a lot known about it. So can you give us a brief overview of what it means to invest in forestry and timberland, what that looks like, some of the characteristics?
Yeah, with pleasure. First of all, what is important is as the world is moving into decarbonization and using less plastic and all these things, everyone is targeting net zero and all these things, but no one goes back. Very few people go back and say, what do we need to replace plastic? What do we need to have more packaging on paper? And if you go back all the way back, what you need is paper. Okay, and there are two different ways of doing that. One is to recycle it, which is not enough, and the other one is to build new paper. And up to now, timber was seen more of timber, not the carbon credit side. It was not more of developing all the needs for paper. And as middle class is growing globally, the population is growing, online Amazon type of trade is happening, more and more paper is needed. This clothes we're having is full of plastic. They need to be replaced by paper. So we went back to the basics. What is the best source of paper and what is the optimal way of getting it? And suddenly, if you start looking into all of this and how this is transforming, timber from a very low return product has become a product that can receive 20, 25, 20% types of returns. Why? Because You don't have to buy expensive land in Scotland to get back returns. You can buy land which is at a better price in different areas of the world. You can go to places where trees grow much quicker. In Scandinavia, for example, or Scotland, or Canada, trees are growing 2 centimeters, let's say, a year. Where if you go in South America, they grow 2 centimeters a day, correct? And the land is still there, the water is there. So with the global economy getting more stabilized, especially in areas like South America or Southeast Asia, and with people needing more paper and getting more developed in terms of carbon credits, what they want to achieve with net zero, timber went from a small asset class within usually infrastructure or special opportunities type of allocation into more core opportunity. Some regions, they have invested a lot, and a lot of people have lost money on timber. Timber is, don't forget, it's a commodity, correct? So as a commodity, it has cycles. And a lot of people have invested in Australia, they have invested in North America, they have invested in other places, and they haven't made money. Now, suddenly, the demand, it's a supply demand, it's a commodity. The demand is much, much bigger because it's not only one product you get out of a tree. You get everything that everyone demands, from better environment to more paper to better bioenergy products, to everything. I mean, very few people know it, but even the Tylenol, the pill we're taking, or the aspirin, all the pills we're taking, most of the thing is wood. Okay, the Formula One tires, most of it is wood. Correct. Very few people realize how much wood is around us, and and how much we need to replace. And as I said, all these clothes, they have fibers which are basically made out of plastic. All this needs to be replaced, and that's a big thing. That's a big situation. So that's how important this whole thing is.
So you mentioned you actually dropped some numbers in there that are pretty eye-popping. I've heard them before, so maybe the surprise wasn't registered on my face, but it might register on some of our listeners' faces. You mentioned 20+% potential returns for timberland and forestry. When I first came across forestry investments, again in the last 20 years, these were North American, these were Australian, and we were talking 4 or 5% expected returns to these sorts of investments. So they remain niche as investors sought ever higher returns to meet growing liability payments in a low interest rate environment. It was difficult to find a place for something that was very illiquid and offered a return as low as that. So it was there maybe to satisfy the requirements for having some kind of sustainable investment in a portfolio. Perhaps it was there to satisfy the whim of a trustee or a board member, but it didn't really seem to have a big role to play in a portfolio. When you and I first started talking about this some time ago, and you mentioned the return possibilities, I have to admit I was rather taken aback, very pleasantly surprised that one could make, an investment which is really at the heart of building a more sustainable economy, a more sustainable society, doing right by the world in which we live. And it could also generate returns that all manner of investors may find compelling. Very, very intriguing to me. And I'm surprised we're not hearing an awful lot more about it. You mentioned the land acquisition cost, the speed with which trees grow. Those seem kind of normal. Kind of things to think about with respect to an investment. These happen to be trees. So the faster they grow, the more faster your investment grows. If your land acquisition cost is cheap, you got a great starting point in terms of value creation. What other attributes make forests attractive? What sort of climate is required to make an investment attractive?
As people expect, and you can see around the world, the most attractive environment is around the Ecuador, in the middle of the earth, basically. And why? It's warm, it's fertile ground, it has a lot of water, a lot of rain, and very, very good environment for to grow trees. The best 3 areas to grow trees are Southeast Asia, areas like Laos and all these places, the Congo region in the middle of Africa and South America. These are the best productive areas in terms of they have water, a lot of water, they have a soil, great soil, and they have the capacity for doing that. What makes an attractive investment is being able, first of all, to process it after you produce it. And processing it, you might need some mills to make paper. You need to have a transportation way of transferring it outside the region. For example, in Congo, which is the best forest in the world, you are in the middle of Africa. It's very difficult to transfer it and take it to different places. South America, if you go to Uruguay or Brazil or Uruguay, you have water paths, which is easy to take it up to outside the world, and you have a lot of facilities to process the wood. That's what makes a difference. The other thing is the world has evolved, and technology and biology has evolved. In the past, you used to put pine trees somewhere in Scotland, and because there were pine trees around you, and you expect them to grow. Now we have the capacity and the ability to test a number of different species and see which one of them would be the best for the specific environment. For what we have done in South America, our partners are doing this for 12 years, 6-7 years they spent identifying what is the best type of tree to put in a specific area so you don't get fungus, you don't get diseases, it lasts for fire, the perfect mix of water and soil. So there's advanced technology that we haven't utilized in the past. Also, up to now, the 3-4 countries that were interested in timber, the pension funds behind them, they were in specific locations. So the Canadians were supporting Canadian, the Americans were supporting American, the British were supporting Scotland, the Scandinavians were supporting Scandinavia, and the Australians were supporting Australia. Correct? That's how it was done. So part of what we said about the Habsburg EIC sustainable is true, but it's also local community. What happened is there's much bigger need, more people want to invest, and people realize that they have to go and get high returns. And the high returns are achieved because of all the mix of what I say: higher demand, better conditions, and more sophisticated ways of cultivating the trees. If you go into South America now, there's a lot of people trying to produce and identify the land. They all rush into now, correct? It will take them 4 or 5 years. You need a lot of research to do it. Southeast Asia is also interesting. Southeast Asia has water paths close to China, which is one of the biggest producers, consumers and producers of wood. But Southeast Asia doesn't have the political stability yet. A lot of the countries there, they're between Laos, for example. They can be ex-communists close to different type of regimes. So, and China is the biggest controller of the area there. But it's interesting to see also now is what happens with Russia being off the market. Russia is one of the biggest timber producers in the world, among other things. And with the recent events we have with Ukraine, I think this will be a bigger supply demand, not equilibrium, and that will also create new type of demand.
I want to come on to the risks. You mentioned the instability of governments. Perhaps there's FX risk as well. But before doing that, just describe what are the best sorts of trees to have in a forestry plantation. Are they softwood? Are they hardwood? What sort of species make for a good forestry plantation? You also mentioned risks of disease. So how does one mitigate risks of disease? Are some species naturally more resistant to certain types of pests, disease, drought?
Yeah, there are many trees actually. Now you can create trees as well. Get the best out of many different types of trees. Like people don't realize, but you can take the best out of many trees and create the best tree you want. Correct?
You genetically engineer a better tree.
Better tree, yeah. So which basically can last longer, doesn't hurt the environment, and It's can be as you wish it to be. So that has helped a lot. That has helped a lot, and also it depends a lot on what you want to do. What do you want to use the wood for? If you want to use for paper, for example, eucalyptus is a great tree, correct? If you want to use it for construction, eucalyptus most likely is not the right tree. You need more pine tree. If you want to use it for furniture, it's something totally different. So what we are producing is a lot of eucalyptus, which we use for paper basically and waste to and biorefineries basically. And this needs a lot of water. It's like bamboo, really. It grows about a meter a month, correct? So you can have 25, 27-meter tall trees, and they're 2.5 years old.
That's extraordinary. That sounds like a weed.
It is like a weed, basically like bamboo, correct? If you see bamboo, they grow quite quickly, very tall, very strong, and that's what it is. They won't grow in Scotland, let's say, for many different reasons, for the climate. And also, a lot of investors should be careful with it. I see a lot of funds, for example, they claim we're 2.5 billion forestry fund, let's say in Scotland or whatever. It can be 2 billion because you buy expensive land, correct? Because I sometimes read reports like 1 billion type of fund, and you can see that a fund with 200 million in Uruguay might have 10 times more trees because the reality is much bigger land, much cheaper. So I think people are getting more sophisticated now with that. And the other thing which people are getting more sophisticated is carbon credits. Carbon credits is a market that has taken off beyond anything anyone expected. And for good or bad reason, globally, the only proven technology for carbon credit, to absorb carbon is trees. But you need to have new forests. Correct? You cannot just take a forest of existing forest and see how you develop it. And as at Astarte now, we're looking to Europe as well to create forests in areas where they used to produce coal, in areas where they used to produce lignite. And this is a new source for new jobs because usually they are close to energy producing factories, utilities, basically companies, creating a lot of unemployment because they close down. And suddenly you can change the workforce moving into more sustainable green investments, getting carbon credits for the local government, getting local jobs, and becoming a new ecosystem, literally a new ecosystem, who can even produce energy using the facilities you have there. And that's one of the great things about forestry. You feel good. I mean, in the areas where we invested in South America, we have become the biggest employer. Unemployment dropped to pretty much nothing. We have now people really getting trained, educated into sustainable investments instead of trying to identify how they make their everyday living. And the quality of life is doing well. So as an investment, is the most ESG you can get, correct? It's E because for environment, I don't say more, sustainable and society, which depends how you read the S, but you really have an impact in the local economy. And governance, with a fund structure where it's one of the most well-designed, practically way of managing an investment. That's why institutional investors like it. So if you combine all this, it's really at the forefront of what people need to see on that. What is interesting for me also, which is kind of might be interesting, is how many investors we have now who, I don't know if I totally agree with them, but a lot of investors say they will not invest if an oil company participates. Mm-hmm. And that's a totally new, interesting angle because I don't know if it's right or wrong, because we still need the oil companies, we still need all of this, and we have to be careful on how we approach all this. But there's a huge demand. So now what the oil companies are doing, they're going to buy their own forests for themselves.
Yeah. Absolutely. Some of the oil companies have become the biggest investors in electric vehicle technologies and renewable energy because they need to reinvent their businesses if they want to survive into the next 20, 30, 40 years as we phase out fossil fuel investing. I think obviously it's a whole other conversation about stewardship and engagement. And I think the original ESG or responsible investment approach was simply to screen out dirty businesses. And I think more enlightened investors today view the engagement with those businesses as being far more impactful generally. If you can influence those highly polluting businesses, those businesses that don't treat their communities and workers particularly well, if you could influence them to change their practices, you can actually have a much more impact with your investments than if you simply exclude them, because there's still money to be made there. And as you mentioned, things like natural gas have an essential role to play as we green our energy production. Yes, let's phase out coal as quickly as possible, but natural gas is going to play a very important role in emerging economies for sure, but also in much of the West, providing the baseline energy that we need whilst we grow our reliance on solar and wind and other forms of more sustainable investment. So we need these companies. Perhaps the best approach is to engage with them and get them to change their practices for the better and do that more quickly. Very, very interesting. I think the whole angle of building better communities, employing people, educating them is something that gets or has historically been a little bit overlooked. But as one digs beneath the surface, you can see the real impact that investments like this can have in the communities and on the individuals. And I think when I first started in this business, it wasn't necessarily obvious that you could feel good about the investments you made whilst making money at the same time. And I'm certainly delighted with the interest today, the focus today on doing good with our investment dollars and being able to generate the returns that we need to meet liability payments in terms of pensioners and insurance companies. And if you're an individual investor or a family office, to meet your investment objectives at the same time as doing the right thing with your investment capital. I think we're entering a new era of investing, which is really exciting for people to get involved with. And forestry sounds like a really, really interesting place for people to be investing in. We mentioned a little bit about inflation protection. What other benefits, if we think about where forestry might fit in a strategic asset allocation, what other attributes does forestry have that make adding it to a portfolio particularly beneficial?
I mean, inflation is one, obviously, but if you really try to have a sustainable portfolio and try to have net zero targets, there are very few investments that have such strong capacity to lead you into a net zero situation. Okay, everyone is setting up net zero targets for 2030, 2025, and 2027, and it's very difficult because if you have a huge infrastructure, transportation, construction, all these type of things, where do you get the net zero impact? It's easy to say I'm not going to invest in oil companies, but still this doesn't get you into the net zero situation. So, for example, in our investment, we have about 15 million tons of carbon credits. Okay, so this is good enough to, and it can become bigger, but this is good enough for all cars in London, let's say, for 2 or 3 years, or all the flights from the UK to the US for a year or two. This is really great to get into a net zero situation, correct? So it offers protection in terms of inflation. You have a material that is also environmentally much better and will help how we transition into the better place, and you also get the carbon credit upside. The other thing, the great thing about forestry, which very few assets you can say that, is you have a bad year, you let it grow more. Correct? This is not an asset that gets worse; it gets better. So you might get delays, and your IRR might drop, but overall you have an asset that is still useful and it's still something you can take to the next level. I believe over the next 10 to 15 years, until we really advance in technology to meet our net zero targets, I think the need for timber across the board, because we might get better technologically and achieve it, but it's not going to be before 15 years. We need to use wood more. And people forget that you need to go to the source of the asset in order to achieve that. I hear a lot of companies, big companies, Forbes 100, and they go out and say, we replace everything from plastic to paper. We don't care how more paper comes out. I mean, you have to care. You have to care, because if we don't have more trees and we don't have more forests that we can utilize, you cannot achieve your goal. So a lot of people are making huge announcements about going from this, but it's someone else's problem. Where the same thing happens in other sectors of the industry, like the batteries. Everyone wants to avoid mining, and they all want to go to electric cars. They want to have the mobile phones. But your mobile phone, your battery in your car, the cables for copper, you need to mine them, correct?
Absolutely. That's unavoidable. Yeah, we need to be digging up a lot more copper, lithium, to create these the technologies that we need to green the planet.
And both of them are natural resources, so both wood and mining and all these are natural resources, and we need to be practical about it. Until technology evolves to the point we don't need either of them, and I hope one day we do, we need to be careful of how we do that. So allocation in forestry really invests on the future of making our infrastructure be more adaptable, and our infrastructure be more and energy being more transitioned into something else. And we need to think more things, like, for example, everyone talks about, especially now with the crisis in Russia and Europe, they all talk about renewables. Okay, renewables cannot replace for now the need we have on other energy things. But also renewables have a cost of being produced. The blades are also plastic in all the wind farms. How do we replace them? We need to replace them with wood. How do we do it? So there's a lot of advances of where all these things is. So a lot of research will go into more technological things, but a lot of research will go also into more practical things. How do you make blades of wind farms be recyclable or be used again? Correct. Now we just bury them. Correct. And that's a huge pollution. No one pays attention to it, but we have millions of blades, and we need to replace them. Maybe wood is the answer to that. So this type of things.
I was thinking in terms of portfolio allocations. We do a lot of work around private credit, around real estate, around private equity, and one of the virtues of those asset classes is the lower or lack of correlation with traditional portfolios of bonds and stocks. It strikes me that timberland and forestry and commodities in general actually may be less correlated with the traditional asset classes that feature most predominantly in individual and institutional investor portfolios. How has the price, the valuation of timberland, how does that correlate with stocks and bonds? And how much value can that add to a portfolio?
Yeah, and the correlation, as you described, is very low, correct? And it's very low because it does not depend on any of the other things. Investors, as you know, look return and risk combined. So it was non-correlated, but it was not delivering up to a point the high returns as well. So people had to keep a balance of how much risk they can get, because for good or bad reasons, most investors get paid on the success of what they delivered based on the money they invested. So the correlation remains low and will remain low for obvious reasons, mainly with the markets and all these type of things. And now with the higher returns, and the higher returns I explained before, but only for carbon credits, you can get the 5-6% you were getting before for the whole thing. So suddenly you have an added layer of returns which you didn't have before. So you have an uncorrelated asset. You have a hard asset which has a value, because things go bad, you still have a protection. Let's say the worst comes to worst, you still have something to sell. You still have something to process. And you have higher returns. So this makes it much more attractive. And this will go across all natural capital. I think with the same will hold for fish farms, correct? We need more food, correct? The same will hold for vertical farming. The same will hold for anything. We are growing more than we can feed ourselves. And we are growing more than we can process ourselves. So anything that has to do with natural capital, I think, will remain uncorrelated, especially on the downside, and high returns, and maybe correlated on the better times. So because the best investment you want is not zero correlation. You want zero correlation when things go bad, and high correlation when things go well. So I think that's the type of asset class we have, which is, I think, is the key.
Yeah, I think that's something that investors need to think very carefully about. Not only can forestry deliver a much higher return than most people probably think, but the fact that it can produce those returns whilst their stock and bond investments might be underperforming, might be performing poorly. So in the context of your total portfolio, they actually can occupy a very, very valuable place, much more valuable than most people actually think. And I think that makes it, doubly more attractive than some other options that are out there today. Now, if we have thousands and thousands of listeners to our podcast, and they all want to make investments in forestry, how much capacity is out there? How much capital could be put to work realistically in something like forestry, timberland? Because it strikes me that it's not easy to put capital to work. It's a less liquid asset class. Some of the areas you mentioned where the growth potential, the growth of the forest, the types of trees that can be grown are more attractive. Perhaps they're in geopolitically less stable areas, which is a deterrent to some investors. They won't want to invest in those areas. How much capacity is out there, and how much can people put to work realistically in forestry?
You see, it's a difficult question and a difficult answer, to be honest. So I think capacity is very high, much higher than people estimate, and I'll tell you why. First of all, unfortunately, you have a lot of deforestation happening already in places like the Amazon and places like that. So this land could be claimed back as forests quite quickly, correct? And in some areas, much easier than others. For example, Amazon, everyone talks deforestation because in Amazon, actually, if you've ever visited, the soil is as thick as 5 centimeters, 10 centimeters. After that is sand. So in order to make a new forest there, it's much more difficult. But there's a lot of land that can be used, and there's a lot of water. You need water. The other thing which we can turn into our advantage is because of global warming, a lot of areas that used to be under ice, they can create new forests. And usually this is fertile ground because it has never been cultivated, and you have quite a lot of water around it. Correct. So this is a new way of doing it.
I think we've discovered another investment here in forestry that can help investors build higher performing, more resilient, and ultimately better aligned portfolios, which is consistent with what we're trying to achieve here at Dot Investing. So I'm really thrilled that you've given us the last 30 minutes of your time and sharing your insights about forestry. I'd be delighted if any of our listeners want to reach out to us. We can try to answer any questions they might have about forestry and the merits of adding forestry to their portfolios. And also, I can potentially put them in touch with you as well. I think that would be a real benefit to our listeners. Thank you very much, Stavros. Really appreciate your time today.
I'll be delighted. Thank you for your time, and thank you for having me here today.
Thank you for joining our latest Dotcast. I hope you enjoyed my conversation with Stavros as much as I did. A key part of our value proposition at Dot is to ensure that our investors genuinely understand the investments that they make. We do this in part by creating informative and educational content, of which our Dotcast series of interviews with leading investors forms a central pillar. To learn more about Dot and investing in private and alternative investments, visit our website at www.dotinvesting.com. Register on the website to receive information on our funds and to subscribe and invest. We'll see you next time on the next edition of Dotcast, where we'll explore new ideas in alternative and private investing.